Hello and welcome back to the QuantScore Financial Show, brought to you by Math and Maticians. We're here to break down the market's hottest opportunities driven by cold, hard data and the power of algorithms. Remember, this video is not financial advice. It is strictly for educational purposes and to spread the word on quantitative trading by utilizing algorithmic prediction models. We're talking about the future of finance, centered on mathematics and computer analytics in search of hidden gems, while avoiding catastrophic pitfalls. So join us as we dive into the world of finance with our undervalued and overvalued stocks for the trading week beginning March 17th, 2025. First up on our list of undervalued stocks this week, let's begin with Baidu, ticker symbol BIDU. Now, I know what you're thinking. Baidu, the Chinese tech giant, in a Trump-led tariff-fearing economy? Isn't that too risky? Our QuantScore algorithm has flagged Baidu as undervalued, and we have complete faith in its process. Take a look at their PE ratio, sitting extremely low at 10.39, especially compared to the industry average for technology companies. And their forward PE? Slightly improved at 9.37. This tells me that Baidu is wonderfully positioned for some serious growth. Sure, their quarterly revenue slightly decreased, but that should not be enough to persuade you against Baidu. We're talking about a company with a massive market cap and a strong foothold in the ever-growing world of AI and search, often referred to as the Chinese Google. Our QuantScore algorithm gives Baidu a solid 6, far from the highest on our undervalued list, but still an amazing opportunity for considerable capital gains. This is a company with a proven track record and a bright future. Don't sleep on Baidu, or they'll double before you can wake. Next up, we're diving into the world of chemicals with Dow Inc., ticker symbol DOW. Now, I know chemicals might not sound exciting, but trust me, this is a company with potential. Our QuantScore algorithm has flagged Dow as undervalued, and it all comes down to their impressive fundamentals. Compared to Baidu, their PE ratio might seem high at 23.08, but take a look at their forward PE, a much more palatable 18.12. This tells me that Dow is potentially undervalued relative to its expected growth. They've had some bumps along the way with their quarterly earnings decline of 29%, as well as a decline in quarterly revenue by 2%. But every company has its ups and downs, and we definitely see this as a buying opportunity, with Dow at a 52-week low and nearly reaching their lowest stock price in 5 years. Dow is a solid company with a strong market position, and our QuantScore algorithm agrees, giving Dow an impressive undervalued 9. Do your own research, but don't miss out on this potentially explosive chemical reaction. Next, let's talk logistics with a company that truly needs no introduction, a company most of us are all too familiar with. United Parcel Service, known typically by their ticker symbol UPS. They deliver packages, they deliver profits, and our QuantScore algorithm suggests they might just deliver some serious value to your portfolio as well. With a PE ratio of 17.07 and a forward PE of 14.62, UPS is looking mighty attractive. And when you factor in their solid quarterly earnings growth of 7%, it's clear that this company is firing on all cylinders. We're talking about a company with a massive global network and a dominant position in the e-commerce space. This is a company that knows how to deliver, and I believe they're poised for continued success, coming in this week with a quant score of 12, primed to take your investment straight to Profit Town. Looking for a bargain? Then look no further than Dollar Tree, ticker symbol DLTR. This discount retail giant has been a staple for budget-conscious shoppers for years, and now our QuantScore algorithm suggests it might be a treasure trove for value investors, especially with the fear of a recession on the horizon, or at the very least a considerable consensus that the market would be reasonably flat over the next few years. In addition to their prime opportunity in a potentially down market, their PE ratio is a remarkable 10.96, while their forward PE of 9.97, another sale to the bargain giant. Add all of this together with a PEG ratio of 1.116, and Dollar Tree is looking mighty attractive. on the valuation chart. Surprisingly, their equation of investment opportunity only increases with a recent earnings growth of 11%, and their quarterly revenue growth of 4% shows that they're continuing to easily attract customers while maintaining strong profits. Our QuantScore algorithm gives Dollar Tree an incredibly impressive 32. That's right, this stock is truly off the charts. If you're looking for a value play with serious potential with considerable risk, Dollar Tree might just be your ticket to riches. Feeling sluggish and dehydrated? Then let's talk about the energy and hydration giant Celsius Holdings, ticker symbol CELH. This beverage company has been making waves in the energy drink market, and our QuantScore algorithm suggests they might just quench your thirst for profits. Now, their PE ratio of 59.18 might seem a bit high, but don't let that scare you away. Their forward PE of 31.06 is much more reasonable, and their PEG ratio of 1.443 indicates that they're still potentially undervalued relative to their growth prospects. Their recent earnings growth of 0.629 is nothing short of impressive, and while their quarterly revenue growth took a slight dip at -0.044, I believe this is just a temporary setback. Our QuantScore algorithm gives Celsius Holdings a remarkable 35. That's right, this stock is absolutely on fire. If you're looking for a growth play with explosive potential, Celsius Holdings might just be the perfect beverage for your portfolio. Hold your horses, investors. Sadly, it's not all sunshine and rainbows in the market. Sometimes our QuantScore algorithm identifies multiple stocks that might be headed for a downturn, so let's start our overvalued stocks for this week with Otis Worldwide, ticker symbol OTIS. Now, I know what you must be thinking. Otis, the elevator company? What could go wrong? Well, according to our algorithm, the company is definitely due for some maintenance. Their PE ratio of 24.47 and forward PE of 24.27 are both on the high side, suggesting that investors might be overpaying for this company's future earnings. Their recent earnings growth of 0.062 and quarterly revenue growth of 0.015 are nothing to write home about, and their ROE of 0.0 is downright concerning. Our QuantScore algorithm gives Otis Worldwide a up and down 14. That's a sell signal in my book. If you're holding on to Otis, it might be time to jump off this elevator before it reaches the basement. Wheaton Precious Metals, ticker symbol WPM, is on our radar today, but not for the reasons you might think. Our QuantScore algorithm has flagged this precious metals streaming company as potentially overvalued, and here's why. Their PE ratio of 53.87 and forward PE of 39.22 are both sky-high, suggesting that investors are banking on some serious gold fever to justify these valuations. And while their PEG ratio of 2.4 might seem reasonable at first glance, it's important to remember that the price of gold can be notoriously volatile. Their recent earnings growth of 0.323 and quarterly revenue growth of 0.381 are impressive, but I'm not convinced that it's sustainable in the long run. Our QuantScore algorithm gives Wheaton Precious Metals a golden 20. That's a sell signal as strong as titanium. If you're already invested in WPM, you might want to hold on to your hats because this ride could get bumpy. Gamers, beware. Roblox, ticker symbol RBLX, is a name that needs no introduction in the world of online gaming, but our QuantScore algorithm suggests that this high-flying stock might be headed for a crash landing. Their PE ratio is currently near -40, while their forward PE of 192.31 is enough to make even the most seasoned investor raise an eyebrow. With a PEG ratio at 8.18, it's clear that investors are betting big on Roblox's hopeful growth prospects, while turning a blind eye to endless turmoil hovering over the stock. Our QuantScore algorithm gives Roblox a robust 21, providing a flashing sell signal if we've ever seen one. If you're holding on to Roblox, it might be time to cash in your chips and move on to the next level. Calling all entrepreneurs and website owners, GoDaddy, ticker symbol GDDI, has been a household name for years. But our QuantScore algorithm suggests that this website, hosting giant, might be losing its grip on the market. Their PE ratio of 26.73 and forward PE of 28.49 are both on the high side, indicating that investors might be overpaying for GoDaddy's future earnings potential. And while their PEG ratio of 3.156 isn't terrible, it's not exactly screaming, "buy me," either. Their recent earnings growth of negative 0.824 is a major red flag, and their quarterly revenue growth of 0.084 is nothing to write home about. Our QuantScore algorithm gives GoDaddy an extremely strong overvalued 36. That's a sell signal if we've ever seen one. If you're looking for a website hosting company with more upside potential, it might be time to migrate away from GoDaddy. Powering down. NRG Energy, ticker symbol NRG, is a major player in the energy sector. But our QuantScore algorithm suggests that this giant might be running out of steam. Their PE ratio of 19.12 and forward PE of 12.17 might seem reasonable at first glance, but their PEG ratio of 2.4 raises some concerns about their growth prospects. And while their recent earnings growth of 43% is outstanding, their quarterly revenue growth of 0.002 is practically non-existent. Our QuantScore algorithm gives NRG Energy an energized 39. That's a sell signal if we've ever seen one. If you're already invested in NRG, you might want to keep a close eye on their future performance before making any rash decisions. There you have it. The QuantScore Financial Show's take on the market's hottest and coldest stocks for the trading week beginning March 17th, 2025. Remember, this is just a starting point for your own research. Find companies you have the most faith in, regardless if that faith is positive or negative towards the company's future. There are ways to invest for both. Don't forget to like the video if you enjoyed anything we had to say, comment down below if you have anything to add or share, and subscribe to the channel for more weekly stock updates and numerical nonsense. And as always, remember that this is not financial advice, and you should always do your due diligence before making any investment decisions. Thanks again, and until next time. Stay calculating, my friends.